Well, we know the Fed is going to start tapering as soon as November, and with inflation fears still lingering out there, and with the rate hike coming as soon as next year, the dynamic that the market has enjoyed the past couple of years is about to make a major shift. But the big question is, what plays will protect you and your portfolio from the Fed and inflation? How do you make sure you are using protection? So I will give you my take on that, and actually my last point will create some real controversy. But hey, that is what the internet is for, right? So make sure you like the video and subscribe to this channel if you like the truth without the hype. And don't forget to get your completely free download, My Stock Investing Checklist, to help you out. And while you're there, check out the Market Insider's private group where I have posted 70 buys now over 19 stocks. And that includes 2 swing trades that netted a 2x and 3x, and you will get notified immediately when I make any other trades. So if you want those alerts, plus 4 free courses, live weekly Q&As, exclusive videos, and a ton more, check out the pinned comment. And before blasting me for promoting it, I have no ads, no sponsors. This is what YouTube pays me in a month, and I give half of that and half the group's proceeds to charity. So let's get into this, as there's really 4 categories of stocks you need to be looking at when it comes to a high inflation environment or the Fed starts increasing the rates. Oh, and give me your stocks that you will be adding down below that you think will thrive during these times. I always love reading what you guys are buying, and we got some pretty smart folks out there, so I'd love to see what you think. So the first would be the exciting big dogs of the stock market. And this honestly would be your Facebooks, your Googles, your Apples, your Amazons, and stocks like that. They have the best businesses, they have the best balance sheets, they all prove that a global shutdown pretty much just meant more revenue and more profits for their companies. They are the new safety stocks, and big money will funnel funds to them if we get high inflation or anything else crazy happens. You get great growth, a dividend in some cases, and we all know they will perform regardless of what happens with the overall economy. They were the big winners coming out of the global shutdown, and many will perceive it as the safest bet in the next phase in the cycle. So now let's talk about the boring big dogs, or kind of the old guard who plays a pivotal role during these times. These would be stocks like Walmart, 3M, and other stocks like that I very affectionately call old man stocks, and yes, I'm an old man. They provide vital products to the economy regardless of if we are in a recession, a period of high inflation, or honestly anything else. They are just very recession resistant. So that makes them the perfect recession play or high inflation play, and for decades, big institutional money has been turning to these stocks during uncertain times, and this time will probably be no different. They may not be sexy nor exciting, nor anything to post about on social media, to be honest, but they will provide a nice hedge if we see a downturn or stagnation in the economy. The third category that will absolutely thrive would be banking. Now look, I get it, nobody likes the big banks, and it makes sense. They're the first to get bailed out and seem to find a way to make tons of money, and when they get too greedy and screw it all up, they tend to suffer no real consequences for their actions. But I am an investor, and to me, as an investor, I view this strictly from an investment perspective. An investment that has government backing, is very well connected within the government, is considered critical to the economy, has the ability to access unlimited amounts of money, employ some of the smartest people in the world, and they benefit massively from higher rates. That pretty much sounds like one of the best, if not the best, inflation investments out there, and they will directly benefit from tapering, which will happen as soon as November, and will benefit directly from the rates increasing, which the Fed is signaling will happen next year. That honestly sounds like something I want to own and be a part of, even if I honestly don't like it. I already own JP Morgan and SoFi, and I'm eyeing Goldman Sachs as well, but there are a bunch out there to choose from. And the final and most controversial on the list is growth plays, but slow down, whoa, before yelling at me, hear me out before blasting me down in the comments. Yes, you're right, during rough times, growth stocks, and especially high growth stocks, get just hammered. I completely agree there. But growth stocks typically are the most overvalued and are just running wild when the market is hit with high inflation or tapers or interest rate increases. Usually they are the most overvalued, and it's not even close. Like, it's not even funny how overvalued they are typically. But we basically have the exact opposite scenario going right now. Large caps are more overvalued overall than at almost any time in their history, and small caps are the most undervalued out of the group. I mean, seriously, Coke's multiple looks like a high growth stock right now. So in my opinion, they may weaken some, but are not going to fall off a cliff because they kind of basically already did fall off the cliff. And with many of them being a great value right now, that means they may be even cheaper and an unbelievable value, which means I will be adding big time. Now, to be clear, I'm not talking about speculating on stocks with great potential or a game-changing product that's not coming for 2 years if it's ever really coming. I'm talking about stocks that have an actual product in the market, are increasing revenues every quarter, and have a huge TAM moving forward. And an example of that would be like Palantir or some other stock like that. Now, I understand completely if you were saying it's not going to be a hedge against inflation or interest rates rising, and I honestly won't argue with you there. But stock valuations are very different coming into this part of the cycle as compared to the past, so instead of dismissing them completely until everything stabilizes, it makes sense to me, according to my plan and what I'm doing, to be looking for opportunities and have an understanding of where the valuation is so I can snap up the great deals and not wait until everybody else piles in to load up. That basically introduces FOMO buying, which we all know never goes well compared to buying when a stock is undervalued, and possibly adding more if it continues to weaken and gets more undervalued. Bottom line, I just don't want these stocks to fall completely off your radar, so I included them as one of the plays here. Just understand that the payoff may be later on that than the first 3 categories. So hopefully this was helpful, and let me know what you think down in the comments. So thanks for watching, and we'll see you in the next one.